This hits everything. It's just that Bitcoin reacts to this the fastest. Okay, so before we even get to the trigger, we already see the liquidity environment that explains why every risk asset's been under pressure lately. Now, if you don't understand that, you're going to end up blaming the headlines instead of looking at the money flows that actually move market. Okay, but now that we understand liquidity, and that alone explains a lot, right? We have to get into the part that almost nobody understands. This is where things get a little bit weird because the price action that we've been seeing the last few weeks doesn't look like fear, right? It doesn't actually look like normal selling pressure. It looks like something broke. And the date everything changed was October 10th, 10/10. Remember that day? That's the day President Trump sent out the tweet. He said that he was going to put 100% tariffs on China, and then it triggered one of the largest liquidation events in crypto's history. Almost $20 billion in leveraged positions were wiped out in less than 24 hours. Now, that's not normal, right? Bitcoin didn't drop 50%. The ETFs didn't give back give all the redemptions back. There wasn't some major macro shock, but the size of the forced liquidations was bigger than what we saw in some of the 2022 candles. Now, here's the key. When liquidations get that big, it's not just traders losing money. Market makers took this too, right? These are the firms that provide the liquidity, that lift the books, that stabilize the volatility. And when they get blindsided, when their hedges get liquidated, and when exchanges use ADL to force close their positions at horrible prices, they don't just get hurt, they pull back, right? They reduce risk. They have to shrink their inventory. They quote smaller sizes. That starts to leave holes in the market structure. And that's exactly what we saw on 10/10. Now, we can take a look at Binance, for example. They had one of its largest forced liquidation clusters ever. Wintermute CEO publicly said Binance's ADL system malfunctioned and hit them with fills that, quote, make no sense. Now then, right after that, we saw the collapse of Stream Finance. It was a $200 million delta neutral fund. They lost around $93 million and went bankrupt. Now that's a fund that wasn't supposed to lose money, but their hedges, they got caught in the same ADL chain reaction. Now, when you put all that together, a major liquidation event, ADL kicking in, a large fund blowing up, you end up with exactly what we've been seeing ever since. And it gets even more strange than that. For almost 2 weeks straight now, someone's been selling Bitcoin every single morning at 9:30 a.m. Eastern time, the exact moment the U.S. stock market opens. The same pattern, the same timing, the same pressure. This isn't retail panic, right? Retail doesn't wake up and then dump Bitcoin at the opening bell on Wall Street. With that kind of precision, right? This looks like has to be a mandated seller, right? This is a fund that's unwinding.